Imagine this. It's 2035. You're on a private beach in the Maldives, sipping coconut water, while your investments are quietly making you money, even as you sleep. But here's the catch. If you don't start building your investment portfolio right now, that dream, it stays a dream, because money never sleeps. But financial regrets, they haunt you. Still think investing is just for old guys in suits yelling at CNBC? Yeah, let's fix that. We live in the most connected era in history. But despite that, most people in their 20s are financially disconnected, trapped in cycles of spending, saving, then spending again. Sound familiar? According to a 2024 Fidelity study, 61% of Gen Z adults have zero money in the stock market. Meanwhile, inflation is quietly eating away at your savings. Every dollar in your account today is worth less tomorrow. Let that settle. You're not lazy. You're not careless. You were just never taught how to start, and that's what we're changing today. Think of building your portfolio like building a sandwich. No one wants to start with the pickles. You need the bread first, the basics. Let's lay down the financial bread. Step 1. Define your investment goals. Start with the why. Do you want to retire early? Buy a home in 5 years? Build generational wealth? Because if you invest without a purpose, you're just throwing darts in the dark, blindfolded, in a hurricane. And no, just picking a few trending stocks isn't a strategy. We'll get to that mistake later. Step 2. Understand your risk profile. Are you a thrill seeker or a safety-first kind of investor? Your age is your greatest asset and your biggest risk. The younger you are, the more volatility you can handle. But here's the trick. Manage risk, don't run from it. Would you rather be scared of losing $100 today or lose $100,000 in potential gains 10 years from now? Step 3. Choose the right account. Open a Roth IRA, a traditional IRA, or a brokerage account. For most young investors in the US, the Roth IRA is a cheat code. Why? Because you invest post-tax dollars today and withdraw gains tax-free later. Uncle Sam can't touch it. Step 4. Diversify intelligently. Don't put all your eggs in one crypto basket. Start with index funds like VOO or ETFs like QQQ. Sprinkle in some sectors you believe in: tech, healthcare, clean energy, but keep it balanced. Coming up, the one type of asset almost every first-time investor forgets, and it could cost you thousands. Step 5. Automate and stay consistent. Set it, forget it, and let compound interest do the heavy lifting. Even $100 a month can grow into 6 figures in 25 years, without lifting a finger after you set it up. That's the magic of investing. You don't trade time for money. You trade patience for power. Bonus. Step: invest in yourself. Read, learn, watch videos like this. Because you are your most valuable asset. Your future wealth doesn't just depend on the stock market, it depends on how wisely you navigate it. But even the smartest investors crash when they make these 5 financial mistakes in their 20s. Mistakes that quietly kill portfolios before they ever take off. So now you know how to build your first investment portfolio in 2025. But if you want to protect what you're building, your next step is just as critical. Tap the video on your screen right now. 5 financial mistakes to avoid in your 20s. Because building wealth is smart, but protecting it? That's legendary.